this morning, so it's a beat on the underlying profit. You're on track to hit those strategic milestones. What were the standouts for you in this quarter, Koos? Good morning.
Thank you. Good morning. Yeah, we had a good quarter. I think what stands out is we actually welcomed 36 million clients in total, so 4% more this quarter as compared to the past quarter. If you look at our primary customers, so the ones who do their daily banking, in fact, in total, we have 10.1 million right now. So there also we had a year-on-year increase of 8%. So more clients we have. Those clients did more business with us. So we have 6.4 billion more loans and 5.3 billion they've trusted us with more deposits. So that part is good. If I look at the client side as well, then you see that in more than half of the countries, we are number one in terms of appreciation of service. They bought more products from us, so you see that in our commission income. And indeed, all of this that led to a result of more than 1.3 billion for the quarter. So we had a good quarter, yeah.
Yeah, you had a good quarter then, Koos, is how you would characterise it. What do you see for the European economy at the moment? If you're to look across your business and assess the strength of the recovery, how strong does the Eurozone look right now?
If you look at the Eurozone, we are in a beneficial period right now. We had good outcome French elections, a most likely good outcome German elections, and no Italian elections yet. So that means overall the atmosphere in Europe is quite positive. We have a bit of momentum, and that results in both good consumer confidence as well as in good investor confidence. And what you see there actually is an economy growing. So we have a 2% growth in the economy at the moment, and indeed all-time high confidence. And we have inflation at 1.3%, which is kind of okay. I mean, it could be a little bit higher, but it doesn't look that bad at the moment. So we have a good period at the moment.
A good period, and confidence is high. We're back at pre-crisis levels all the way around Europe. So that's a big tick in the right-hand side of the column. But let's talk about the possibility for loan loss provisions, because prudence would dictate that you're a prudent CFO. Can you update us in terms of the level of loan loss provisioning? Do you expect to take a little bit more? Because these are sort of abnormal times in terms of the low points that we're at. An update for us, Koos?
Yeah, what you see overall, and probably our bank is not unique in that the overall amount of loan loss provisions is still way below the long-term average. Nevertheless, it starts to pick up a little bit, and that is not so much because we get new inflow of difficult loans. It is more because we have worked our way through the pile of old loans during the previous crisis, where in general, if you work them out, you get releases, and you see that you have less loan loss releases right now, and you have a normal inflow. So overall, you start to see a gradual pickup, but I wouldn't say that is because an economy is turning bad. It's more because of the stock of old files is depleting.
Koos, can I ask you about Brexit preparations at your business? It was interesting to see the news that ING was planning to move some trading jobs to London quite soon after the Brexit vote took place. Do you still plan to do that? Have you done all of that already? And do you think the Dutch government should be doing more to try and attract banking business and financial services business to the Netherlands?
Yeah, overall what we did on the trading side is we were having overlaps between 3 dealing rooms pretty close to each other in Netherlands and Belgium and London. And what we said is, let's move some jobs more to London. I mean, that was not a real big operation, but we still felt the talent pool is there, the people are there, so that is what we have done. Nevertheless, if you look overall at ING, then, yeah, we're headquartered in mainland Europe. We have a branch operation in the UK. We are serving global clients from there. And in general, what we'd like to do is to continue that operation operation and to serve as a non-EEA branch. That would be our preference, and then we can continue to follow our clients. But in terms of legal setup, I would say we are flexible to follow our clients in terms of their business, so we don't foresee major implications on that side. If you look at the Netherlands, European countries are right now moving into taking some of the operations from London banks onto the mainland. There is some successes of that in the Netherlands as well.
One of the statements that you make this morning is about hitting your strategic goals, and obviously part of that is cutting 7,000 positions and 900 million euros in savings targets. Can you update us in terms of those strategic targets and how close you are to achieving them, and any adjustment for the market?
Yeah, we just announced actually these strategic initiatives last quarter, 2016. Why are we doing all this? We are basically saying there will be convergence of platform, product simplification, so you can start to serve your clients with simpler products and from more one platform rather than a number of platforms in countries. That is what we are preparing for, but that's a 4-year operation to do that. So yes, now, last year we outlined what we do, and we are taking the first steps right now, but we will continue to work on this, and we will start more and more to report on this separately over the next quarters, because these programs are taking place. As you know, in the first quarter, we had indeed the announcements of what will happen with the jobs over time, and we are just in the process of executing that right now.
Koos, one final question. Net interest margin is the critical thing for a bank like yours. In terms of rising rates, we've seen quite a dramatic move in 5-year, 2-year, 5-year and 10-year benchmark paper higher. What are you expecting from the ECB? You obviously welcome this move in the trajectory of rates higher. How are you looking at the spreads as we go into the second half of this year?
Overall, what I see indeed is a yield curve in Europe is steepening, so there's quite a lot of anticipation for interest rates to go up. In fact, what you see right now is even more expectation in Europe of rates to go up than in the US. I would say there's quite a lot of interest rate expectation expected in the market in that sense. So I would say maybe a market is getting a bit ahead of itself, but overall, yeah, it's a big change in sentiment since the end of June.